Hello, smart trader. There is a concept I want to discuss, which is fair value gap, right? I want to discuss how to use fair value gap effectively on your chart, especially for the beginner trader and the intermediate trader. You understand, so that you can know how to use this concept. A lot of people talk about this concept. Some call it imbalance, some call it inefficiency, and all of that. At the end of the day, we are all saying the same thing. Basically, if you are new to the concept of fair value gap, it is nothing but the gap between a three set of candle. You understand, a gap that happens between a three set of candles, and this basically happens when there is a large volume in the market. When there is a large volume of sellers in the market, you have this kind of gap, and 80% of the time the price tends to reprice into this gap. You understand? So this is what I want to show you here. So first, on my board here, you want to see three candle step. You understand, it must be a three candle. You understand, although there are other advanced model that I will show you as time goes on. So you want to make sure you subscribe to this channel, because that video will come up. I'll show you another form of fair value gap. You understand? So in this case, you can see clearly that it is a candle between, it happened between three set of candles, which this guy is the number one candle, and this is the number two candle. You understand, this is the number two candle, and this is the number three candle, right? So what can you see? Basically, you understand, for a fair value gap to be valid, it must not have the third candle and the first candle. It must not have, their wick must not overlap. You understand, the wick of this third candle here, you understand, this is the third candle, and this first candle, the wick of the first candle, they must not overlap. So in any case, if they are not overlap, that means you have a fair value gap right here, and that is key. That is what I marked for you right here. So I hope by now you should have the idea of a fair value gap. And just like I said at the beginning of the video, I told you that this guy often, when this fair value gap happen, price reprice into this level again. So you will likely see the chance of price going back into this level is very, very high, right? You understand? So you will likely see price pushing towards this fair value gap to fill it as the internal liquidity, right? So let me show you again. And then another question that will come up is that, how can I use this thing? How can I use this fair value gap to become my advantage in the market, so that it will not act as a disadvantage to me? Don't worry, I have you covered. So I will give you a two concept that you can use on your chart with fair value gap. How you can use fair value gap effectively on your chart. Two methods that you can use it. You can use to leverage fair value gap. You understand? So this is it. So you can see clearly that we have a price here. This is the fair value gap. This is a price action right here, and you can see the fair value gap. So you can using fair value gap as internal liquidity to guide your exit. You understand? In this case, we are talking about exit. You understand? So as a trader, maybe you have spotted your fair value gap on a 4-hour time frame, 4-hour time frame, and a 2-hour time frame, for instance. You understand? And the price is sitting at a demand level. Knowing fully well that you have an imbalance above here, you know that price will likely push towards the upside, right? You understand? So you want to put your stop loss below here and target the fair value gap, because you know quite alright that price will eventually price into this fair value gap. So whenever you want to put your take profit, you know that, okay, let me, as a smart trader, you want to target a slightly above after the fair value gap. You understand? So you can put your stop profit there, and you see price pushing aggressively into that level. One thing about fair value gap is that whenever there's a fair value gap, majority of the time you have another opposite movement equal to the opposite movement. You understand? So if there's a fair value gap from the bearish side, you will likely see another massive push into this level with a bullish movement. So a price has to, at any given point, price have to balance itself. Whenever there's a massive sell-off, there should be equal and opposite buy position. You understand? So if you know this concept, you can easily utilize it in your favor. You understand? On the chart. So this fair value gap can guide your exit rather once you have spot your entry from the demand level, you can use fair value gap to guide your exit. In this case, what I mean by exit is TP. You understand? You can use it to guide your TP, right? So let's go further. Let me show you another concept, another method you can use to leverage the fair value gap in your favor. You understand? So let me show you. Don't worry, I'll go to my chart and demonstrate all these concepts for you so that you can see clearly that this thing actually exists on your chart, right? So you can see clearly here that you can equally use fair value gap as an entry point. You understand? So let me mark this and highlight it for you. You can use it as an entry point. Why? Because majority of the time, remember I told you earlier that whenever there is a fair value gap, price tend to push towards it. You understand? So, and you will likely see price stopping exactly inside the fair value gap, although it is not common, but it do happen on the chart. You understand? So I want to tell you now so that you have it at the back of your mind, so that when you see it, you will not be a stranger to it. It will not be a strange thing to your eye. You understand? So whenever price tap into your fair value gap, it is a clear sign for you that price may likely return, especially when it is giving you your confirmation candle. This confirmation candle could be an inverted hammer, like just like this illustration here. It could be an inverted hammer, or it could be a spinning top candle, right? So whenever this type of candle forms on your chart, especially in the fair value gap, it shows that there will be a likelihood of price pushing aggressively towards the opposite direction from the fair value gap. So you can equally use fair value gap as your entry point. So once you spot this thing happening, manifesting live on your fair value gap, especially when prices are giving you a liquidity sweep, and after the liquidity sweep, it gives you this type of signal candle. It could be inverted hammer, just like I told you, inverted hammer like this, or spinning top candle. A spinning top candle has a smaller body and an equal longer upper wick and lower wick. So this type of candle are signal candles, so they can give you the clue that price will likely push from this level towards the upside. So that is how you can use your fair value gap logically to find a bias or to find your exit point in the market. You understand? So let me go to my chart here and show you that this thing actually works. You understand? So this is a good example here. You understand? What can you see clearly? So you can use this level as your supply zone, right? So what can you see? We saw that price tap into this supply zone, and as a trader, if you want to sell, you are to likely sell from this supply zone, because of course price tap into it. And before price tap into this fair value gap, it take out liquidity. So look at this beautiful liquidity here. So price take out all this liquidity before it change state of delivery, or whatever I want to call it. And as a trader, if you are to enter from here, look at it. Price gives you that signal candle that I'm talking about. You understand? After this liquidity sweep here, look at your signal candle here. So the moment you enter the trade after the hammer, you understand? The hammer in this case, it is called a hanging man. You understand? So after you enter the trade, you can, let me demonstrate it for you properly. After you enter the trade from the closure, the moment this signal candle closes, you know that you are already going for the TP direct. Because why are you aiming higher? You are aiming higher because there are massive imbalance behind here, the imbalance at the left side of the price. You understand? So these are the internal liquidity that you should target. You understand? And look at what price did. Price eventually priced into this massive fair value gap right here. Look at all this massive fair value gap. Look at all these imbalances and inefficiency. So the moment price is here, you know that, oh, price will likely push towards the downside, and you enter a trade with your full confidence. Although nothing is guaranteed in trading, but at least once you have this type of confirmation put together, price tap into your supply level, give you liquidity sweep, and equally there is a inefficiency right here. So when this confirmation couples together, it eventually gives you what we call confluences. At that point, you are not just gambling in the market anymore, because you have your logical perspective of the market. You have everything aligning before you jump into the market, right? So this is how to trade as a logical person. So that is it right here. That is what I showed you, that you can equally use Look at it here. You can equally use it as your exit point, and look at it on the chart. You can equally use that your exit point. Look at what price did here. So if you are entering from here, since you know that there are imbalances here, you can take your profit a little bit below or after all this imbalance, because you know price will definitely price into these imbalances, so it can equally guide your exit. Okay, let me go further and show you how you can equally use it as your entry level. You understand? Look at what price did here. You understand? It was a very typical example of using fair value gap as your entry point. Look at it. Look at this massive imbalance that the price left behind here. You understand? So the moment price into it, because of course I told you earlier that whenever there's a fair value gap, it acts as the internal liquidity and equally acts as the magnet. You can call it that way, right? You can call it a magnet, right? So price tends to magnet towards this fair value gap, and the moment price tap into this fair value gap, look at what price did. It eventually pushed from the fair value gap towards the downside. So sometimes you can use your fair value gap as your dynamic supply zone or dynamic demand level. You understand? So in this case, it is now acting as our dynamic supply level. You understand? So the moment you see your liquidity sweep right here, exactly inside the fair value gap, look at your liquidity sweep here. So the fair value gap, there's a liquidity sweep inside the fair value gap. This is another confirmation. So you want to enter the trade, you can equally take your trade like this. You understand? Put your little bit after the closure of this candle. You understand? Although you may have little up and down movement at that level, but at least it will eventually go and tap into your TP, because of course you have another confirmation here. You understand? Look at this massive imbalance as well. So what this imbalance is equally telling you that price will likely price into it, and price did exactly just that. So you have different confirmation. Number one, you have your fair value gap acting as your dynamic supply zone, and equally you have another fair value gap. By the time price was moving into this master fair value gap, it equally created another fair value gap. So once you want to enter from here, you discover that you are going to have a clean 1 to 2. You understand? Because price will likely price into that fair value gap, right? So that is how to trade this thing, guys, and you are going to have a nice risk to reward ratio if you are using this kind of setup. You understand? So if you're a scalper, you discover that majority of the time you come out clean in the market. You understand, right? You come out very clean in the market and you make your money. You understand? So 12 pip is not a bad fit at all. You understand? So let me show you another example on JBP/USD, so that some of you will be like, oh, is it only JBP/USD that this concept works? No, it's not only Euro USD. It can equally be found on other pairs. You understand? Look at this example. Look at this example, right? You understand? So look at this fair value gap. The moment price tap into this fair value gap, you can clearly see that it pushes from this level. You understand? Pushes from this level towards the upside. Although it was not a massive movement, but at least it moved from this level. You understand? So, and equally there's a fair value gap say, so price eventually tap into it. It was not as exactly as it is, price did not stop exactly inside the fair value gap, but at least it shows you, it gives you the signal that price will likely continue towards the fair value gap. And look at what you are seeing on this daily candle as well. You can clearly see that price have a fair value gap. You understand? So this was the Friday candle. Friday candle closes as this type of hammer. You understand? So the chance of us seeing another candle going into this massive imbalance as from next week is very high. You understand? So you can always use your fair value gap as a guide. Whenever you see it on your chart, you know that price will definitely price into it. You understand? Look at another example here. Look at another example. Look at this massive fair value gap here. Price eventually did tap into it. You understand? Look at it. When price was moving aggressively towards the upside, some people will be like, oh, price will never come down again. But eventually, after some few days, just like maybe 7 days or interval, price tap into this fair value gap again, fill it completely before it start moving towards the upside. And what I want you to understand is that after price eventually claim a large fair value gap, it has to have a liquidity sweep as well. So look at it, price tap into this fair value gap completely, engulfing it, and eventually it shows you liquidity sweep. Look at this liquidity sweep, price close below this low, you understand, before it start pushing towards the upside. So this thing works, guys. You can equally use it in any time frame. If you go further to 15-minute time frame, because a lot of traders like using it on the 15-minute time frame to enter their trade or to guide their exit point, right? So you are equally going to see it. Look at it, this is 15-minute time frame, and you are already seeing it right here. Look at it manifesting here. Look at this fair value gap here, right? You understand? Let me show you. Look at it. So look at this fair value gap, this massive fair value gap. Price eventually tap into it, you understand? Look at it, price eventually reprice and clean this fair value gap before it start pushing towards the upside. And remember, before it start pushing towards the downside, and remember I told you that you must likely see a liquidity sweep even within the fair value gap. Look at it. Look at price, look at what price did here. Price give us that liquidity sweep within the fair value gap before it eventually change direction and start pumping aggressively towards the downside. So if you know how to do this thing logical, you discover that the price is not just random. It is not just random, it is logical, you understand? So we have to follow it in a logical manner if you want to win consistently in the market, whether in the stock market, crypto market, it doesn't matter. This concept is valid and it works in any market you are trading, you understand? So let me go further. If I go further, I can spot another example for you. But at the end of the day, what I want you to take out from this step is that the fair value gap acts as your internal liquidity or a kind of magnet. Price tends to move towards it, so you can use it to guide your trade. So this is where I end and draw the curtain for today. If you have another question, you can reach out to my community in the Telegram group. We can help you there. We trade together as a family. So peace out for now. Thank you.